You're listening to the Unmitigated Podcast, the podcast that brings to light the hidden risks business owners and entrepreneurs take every day that may not be covered by traditional insurance. Here's your host, Van Carlson.
Hello, Van Carlson, founder and CEO of SRA 830B Admin and the host of podcast Unmitigated. Thanks for joining us today. We got special guest, Brian Van Camp, Lincoln County in Utah. He's been a partner of ours for a number of years now, and it's been a great relationship, and it continues to be. And we're excited to have Brian as part of our team that does a lot of our prepares a lot of our tax returns for the 831Bs. And he also spoke at our symposium this past year. So, Brian, welcome to the Unmitigated Podcast.
Thank you, Van. Appreciate it. Glad to be here.
Yeah. So we're going to, I kind of dive right into stuff here a little bit. How long have you been a CPA?
We're coming up on 14 years now.
What did you do prior to that?
So prior to that, I was a banker. So I used to run the commercial banking group for KeyBank's commercial banking department for the state of Utah. So like all things SBA, business, business financing, acquisitions, all that stuff kind of rolled through my group.
It's interesting. I've known a couple CPAs that have come from banking. What made you decide to go CPA route though?
So like as I was working with all these like $5 to $50 million business owners, I would find repeatedly that I would keep hearing from these clients that their accounting relationships were very like almost apathetically described. They would be like, they're just historians. And as a sales guy, as a relationship based guy at the bank, I'm like, there's a missing piece here. So yeah, I decided up and leave about 12 years ago. Really with the intention of trying to be that accountant that was a little more forward thinking, trying to be more proactive in the advisory section and answering that need that clients were missing.
No, that's great. I would agree with what your statement was from the general populace when it comes to business owners, when it comes to their CPA relationships. I think they hold a lot of trust in their CPAs.
Right.
I just don't know if we deal with a lot of different kind of business owners, and you do too, obviously. And, they're good people, right? But sometimes maybe they're not, they didn't go to business school, right? They didn't get their master's in business, and sometimes they just don't know they're busy. God bless. But sometimes they do develop relationships, and sometimes I think the trust sometimes are just the carte blanche, the credibility they give. It's not that CPAs have an easy life, which is kind of what I want to get into a little bit with you. Is I know it's a tough world, it's a tough profession, honestly. And that all being aside, though, some of these business owners, I see good practitioners, but now they're running a $50-100 million a year company, and you're with one guy, and he's a local guy in the town, and you went to high school with him. It just seems so crazy to me, but I get it. Their business owners are super loyal, and that's probably been our biggest frustration at SRA. Quite honestly, it's just don't shut it down so quickly. Understanding what we do as a minister of 831B plans, but more of just educate, review it, and everything else. So I compliment. Thanks for being one of the guys out there that do that in the CPA community. What do you there's been a big spin up on the AI stuff, right?
Yeah.
In your world, we hear about it from legal, accounting, anything that can be, software driven can be, put into AI. What do you think about that? Do you think it's all a bunch of hoopla? Do you think it's a possibility down the road, or people punch their own numbers in and AI will spit out a tax return to you?
It's hard to imagine what 10 years looks like, but here's what I think 5 years looks like, because I know what today looks like, and I can see the trajectory of where it's going. So I'm on the customer advisory board for a company called Accordance, which is one of the leading tax-specific AI tools that are out there. So they're building it, and they've been using our feedback to kind of help to kind of fine-tune it and work on the LLM model. And kind of what I notice, I use it every single day. I do a lot in it. But if you don't know what to prompt it with, and the world of tax is so vast, if you don't know specifically what to prompt it with, you're probably not going to get the most accurate answer back out of it. That's at least been my lived experience currently. I suspect that they're going to get better at that over the next 5 years. it's hard for me to imagine with where things are today that you're going to be able to just upload a trial balance and say, give me a tax return, because there's a whole slew of questions that need to come out of that if you don't know what to ask it, you're probably going to miss it. So could it get there in a ways? Yeah, maybe.
Well, I suppose
Not
it
soon.
depends on the sophistication of the business and the types of businesses and the multiple businesses that one taxpayer might even own, right? I mean, I found myself in
Right.
that situation. Just recently, I mean, I hate to want to say this, but my personal tax return was over 130 pages. And
Sure.
so that gets complicated, the more stuff you do, I guess. But I guess for the maybe the guy that, especially individual. I mean, individuals are almost there now, right? A simple W-2.
Sure.
I mean, all that stuff. So, but yeah, to your point, I think we'll see where it goes. I do think. Would you not agree though that no matter what, the CPA profession has to get away from so much of the compliance, but more of the true tax planning?
Yes, 100%. I mean, if you look at the landscape in the CPA world right now, we've got about 46,000 firms nationwide. Okay, 46,000 firms. To be one of the largest, roughly 1,000 firms, you really need only to be around a $10 million firm, which is really not that large in the grand scheme of things, which tells you that it's really, really fragmented. Who are the other 45,000 firms that are out there that are less than 10 million? It's largely compliance driven people. Once you get into the north of 10 million, you're doing all sorts of consultative approaches on how to work with a different general ledger platform, install new accounting software. You're doing R&D tax credits. You're certainly swimming upstream in the consultative approach because that's what those clients need and demand. I think my curiosity will be what will happen to those firms where the lion's share of what they're doing right now is purely compliance driven in 5 years. They're going to have to start to migrate away and find a home in the consultative approach.
Yeah, in fact, what I've seen in the last couple of years, honestly, is a consolidation for some of those,
Yep.
right? Being bought. It's cash flow, so
Right.
it's an attractive model to be bought. And I think there are no time getting replaced anytime soon. Even if AI was to flip the switch, people have to be willing to adopt to it too, right? Not just the software adopting to them.
Right.
And so, but I it's one of the big things I've seen though through this merger acquisition is some of the CPAs that were doing the compliance stuff, and they've been bought out, and they have a non-compete or whatever.
Sure.
They're kind of going out and being more of the tax consultant. That's what I've seen. I've seen a lot of people that were in the profession. Now they don't necessarily sign tax returns, but now they're advising on their clients. And that's one of the things I've seen with business owners that have taken that approach, because obviously we know the way the laws are written that, obviously the accountant that signs the tax return can be held liable to
Right.
tax fraud and all that good stuff. But the person that's advising and that's not necessarily signing a tax return can be more, let's for better word, more forthcoming. I mean, about as far as maybe being aggressive or not aggressive. The aggressiveness is in the eyes of the beholder, right? So,
Right.
But that's one thing I've seen tick up over the last couple of years. Honestly, is more tax advisors hold themselves out as, here's a tax code. If you're not, a good example is 831B. I mean, we've got a lot of accountants that will search us out to educate and understand how our process and procedures and all that good stuff, and then maybe become a partner of ours, maybe not. But they're always trying to educate themselves on that. So that's one big difference I've seen in the last couple of years, which I think is good for the business owners. Honestly, I do think the business owners, again, like I was saying earlier, I think sometimes they hold so much. Hey, my accountant's always looking out for me, and I get that, and I think most of them are. I mean, my daughter works. I don't know if I knew this or not, but Katie that works for me now, and I have two grandsons, because she stopped working at Deloitte. I mean, I kind of said it to myself early on, and man, if she's kept working at Deloitte, I think she worked for them for almost 3 years, and she worked her tail off. I mean, the amount of hours she was spending was unbelievable, and I look at that and I think, that can't be fun. I mean, that can't be fun. I love the way, I think you literally went on vacation. The reason why we didn't do this early, because I think you went on before the 15th of October. And I thought, okay, that's the accountant you want to hire. Honestly, the guy that's not running around with his head cut off on October 15th, trying to get tax returns done, but he's actually going on vacation. That seems like a very organized office. And that's somebody you want to do business with. I mean, that would have been also a litmus test, wouldn't it? Now, if you're the business owner and you want to be late and getting all the documents of the taxes, And I hope you guys charge the living hell out more out for that client than some client that, hey, I'll get my stuff to you by February. We're probably still going to have to do an extension because, I got to wrap some stuff up, or I'm waiting for some, K1s or what K1s, right?
Yeah.
All that good stuff. But would you not say that's a good litmus test if you were to go out and search for a new CPA? Like, what are you doing on October 15th? If you're telling me you're in Hawaii on a beach, I'd probably, man, how can you become my CPA, right? I mean, that's in my head.
Yeah, I mean, I mean, for me, like if I was a business owner looking for a new accountant today, I think the questions that I would like to ask is, how available are you? Like, what's your model? Are you high volume, which means you're going to be slammed at all of those deadlines? A guy like me is relatively low volume but high quality, so it gives me a little more flexibility around the deadlines because I'm not hell bent by 1,000 different clients I'm working with. I've got 350. The other thing I think I would ask like a new potential CPA is to get a sense of kind of like how involved in tax research are they? I might ask the question, what was the last tax position that you researched? Because I think you're going to find that out of the 46,000 accountants that are out there, you've got a lot of them that don't actually do tax research. Again, they're really the compliance-driven individuals. That will start to show when you ask, what was the last complicated tax situation you did some research on? When they can sit there and articulate what it was, what the position was, how they got to the conclusions they drew, you're going to start to get a sense of how does that person think? How creative are they? How willing to get kind of dirty in the 50,000 pages of code, regulation, and law are they willing to do? It's gonna tell a good story, honestly. I think a lot of accountants don't love to research, and therefore they also struggle to be strong advisors because they don't have a good bench strength in what the law says you can and can't do. They just know what the industry publications and what Reddit says, frankly, in that version. So.
No, I think that's bad. What you just said, I thought was great advice for any business owner. Because one of the things, I belong to a Vistage group, and it's the CEO group, and it gets thrown out there almost every meeting. They want to fire their CPA, right?
We're not a popular bunch.
No, it's a love-hate relationship, right? Unfortunately, but being in the insurance business, I'm in the same group there, right?
Sure,
so that's true evil kind of thing, right? But that aside, though, I do think that's almost like I can see an article here, maybe something I had to get Bree on with you, Brian, talking about if you're going to switch CPAs, here's the 5 things you might want to ask. Yeah. I think that's a great op-ed, which we may want. I'll follow up with you on that because it's one of the things. It's kind of like changing insurance, right? There's a perceived headache factor. Right? Meaning like, God, how much do I really want to move to CPAs, right? How much do I want to move my insurance program, right? Or fire my attorney. I mean, all these things that we got to deal with as business owners. And it's like, man, I'm already busy enough. Why do I got to change? And of course, you get to it gets so heavy on you that you eventually do something and you probably act irrational, unfortunately. We want to head that off. What do you think the process? Well, what is the process when you want to switch? Is it a big undertaking? What's a typical thing when? Okay, let's say you're bringing on a new client. What are you looking for that you're going to need in order to hit the ground running with that client when he says, "Hey, I want to switch CPAs. I've interviewed you, Brian. I like what you're doing here. I need more tax advice. I'm going to come to you as a client." What steps are you going to take on your end for that business owner to make that somewhat smooth transition?
Yeah, you bet. Great question. I mean, so for us, there's 2 things that you have to get. I mean, we certainly want to get the most recently filed business and personal tax returns, including all the schedules, depreciation, things like that. We typically also want to see a year-to-date P&L and balance sheet so we can start to put together what is this organization chart start to look like? What are the different purposes of each business that's there? Why does it exist? What objective are you trying to hit with it? What goals do you have? What kind of revenue? What kind of profits coming out of that? As you piece that together, then for us, the next step is let's have a consultative conversation where the goal of that conversation is to dig into what's the current state of things and where do you want to go with this? And we try to make that conversation more about planning, more about identifying specific things that we see in your financials and your tax returns that your current situation seems to be lacking or missing. We find those conversations to be really eye-opening for clients. And it usually is the gateway for them to go, okay, now I see that there's a difference. Because until they have that conversation, it's hard for them to assume that anything is really going to be that different between them and the next firm. I find that to be the biggest, catapult into that conversation. And then from there, it's really actually quite simple. I mean, we've brought in lots of new clients. It's how we've grown to where we're at today with 35 to 40 employees. We have a pattern of bringing them in. It's actually really quite simple. I think the business owner can kind of de-stress what that transition looks like, as long as they can get us those two things. And then beyond that, we can kind of take the rest of the heavy lifting, honestly.
So what makes you decide when you, I think the biggest thing it's like a lot of other businesses, the biggest challenge for growth for your firm,
Mm-hmm.
qualified help.
Yeah,
Fair.
sure.
When you decide, okay, but your capacity is your capacity, right?
Yeah.
So, I would imagine, like kind of like what we do, whether it's good, 20% of the book on the bottom is kind of going away, and who are we replacing
Sure.
that, right? And the quality's got to go up, and because our time is constrained, and we're doing that here at SRA. It's one of the reasons why we introduced minimums this year, and some of those minimums were really for the benefit of the client, because if they're not doing it, why are you here? It's just long term.
Yeah.
You're not winning, Mr. Client, and that's never good. You want the client to always win, but outside of all that stuff, what triggers you to want to grow? When you want to grow because of we just hired a new personnel, their capacity's higher, let's go. Or how are you doing the growth mode that you have in your business?
Yeah, so candidly, so if you were to look at the last, fairly transparently, I'm probably an oversharer if I'm being honest. But like if you were to look at our revenue back in say 2020, we were maybe 1.9 million in revenue. Today we're about 10. We've grown about 30 to 40% every single year for the last 5 years. And honestly, what kind of boils down to me is like we don't do any marketing or advertising really to speak of. For us, it's just we take such good care of the clients that the number of referrals we get continue to reach that need for us to keep hiring staff and keep bringing people in. And I just have an insatiable appetite towards helping people. Like if I'm being honest, like I really struggle with someone calling me and I can see kind of the hellscape that they're sitting in the middle of and going,
yeah,
my heavens, how did we land here? Like I think we could do some things here to really help you out.
Yeah, you see somebody going off the cliff and you want to stop.
Yeah. I almost can't help myself. And especially because typically that individual that's coming to talk to us is coming from another one of our existing happy, satisfied clients. But I just want to keep everybody happy. So that's what's kind of facilitated the need for the growth. Fortunately, we've been good on recruiting. I would say one of the things we tried to change maybe 3-4 years ago was I stopped looking in Utah only. I really had to branch out. We had to get comfortable with remote workers. We had to create the technology and the software to be able to monitor everybody's production and their utilization rates and try to make sure that we've got a group of people that are qualified, capable, and working hard. Once we had the software and Domo and all of the data analytics in place, it made it so much easier to manage. And now we've got employees in 17 different states. And I like that because I'm not hell bent on needing just people within 15 miles of my office. Whereas a lot of accounting firms are still wanting people in office. Not going to lie. Like it's still a big thing. I kind of moved away from that 3 years ago and said, I don't really want to look back. Like we have to be flexible and open the talent pool.
Well, I think it's helping with the quality of life that, unfortunately CPAs can find themselves in that can be an issue, right? The life balance thing, I hate to even talk about because you're never in balance. So let's not try to but
sure.
The fact that the quality of life, leading to where they can live and work where they want to live and work is huge.
And honestly, like one of the things we do differently than I think most firms, from what I can tell anyway, is we implemented comp time. A lot of firms don't like comp time. And for us, if I'm going to ask you for 50 or 60 hours a week in March, I'll let you have 30-day weeks all summer long. Like it will even out. And so people come to us because they like the lifestyle balance that we try to strike for those folks.
You got to do something there. It's
good talent.
Yeah, no, that's great. Some of the things that we get some goofy stuff coming across our desk, and what I mean by that is, we're out promoting a tax code, obviously, right? Yeah. And we have to compete against other tax codes.
Yeah.
And I'm happy to share some of my stories with you, but I'm just curious, other than hopefully you won't say 831B when I ask you this question, but what are some of the most oddest kind of, I hate the word, you use the word scheme, but
Sure.
like some of the weird tax things that your clients have been promoted to that you kind of looked into? Because I've seen some things come across my, like we're competing and I'm like, what? They're doing what? That does that even sound right to anybody? But anyway,
Sure.
what have you seen out there? Because I'm seeing some stuff lately, even that kind of scratch my head, going like, "Are you really buying on that, Mr. Business Owner?" But anyway, what have you seen? I'm just curious.
Yeah, I mean, so I'll say two things on that. One is anytime I see things like that, sometimes my first reaction is a little the same way. I might feel a little icky, like, boy, this feels a little bizarre. But I always try to give everything its fair shake. I always research it. I always look at the code. I try to say, look, if I had to defend this thing, could I, would I, how would I do it, etc. And there are some things that I still look at and go, no, this is just out there. And there are other things when I'm like, initially, maybe I felt icky, but I think I'm okay with it. But if I'm being honest, like I would say that my number one thing that I dislike about what's being pitched out there right now is you have, and by the way, I love the 831B. You'll never hear me say anything other than that. I think it's a great tool. It's a great risk management tool. I've done it for 7 years, as you know. But the thing that I dislike that's out there so prevalently is people that are trying to sell a concept where the tax tail is wagging the dog. They're trying to pitch tiny homes as an example, or mobile home parks, or any number of things where it's a leveraged return to get there on some forecasted assumptions that we don't really even know if it will be there, all to try to get some kind of a depreciation benefit today. And I'm sitting there going,
Oh yeah.
damn, even if the depreciation works out, even if it does, is this the investment you want to be in? Like, let's not let the tax tail wag the dog. Like, wealth growth and tax should be able to exist cohesively, and it should work together. We shouldn't go out there and do something just because it's got a tax benefit. And I start seeing things like that where I'm going, my goodness, like the amount of risk, the exposure,
Yeah.
the liabilities, the everything that's coming into this thing. This is a bad investment masquerading as a tax benefit, and you're supposed to not care. I would say those are the ones I'm struggling with. Like and for me, I run the numbers. I go down the path and say, okay, let's go analyze the investment. What's the ROI? Is this a good investment absent the tax benefits? Or are you only doing this purely because of tax? 9 times out of 10, the answer is yes in those situations.
And what's sad about that is, the risk equation doesn't even go into the back end, right? I mean, I've seen some
No.
performers, they're running at 92% occupancy on
Yes.
some, and you're like,
On
what are they
something
running
not built
now?
yet.
You know,
On something not even built. I'm like, good hell. Like, that's 3 years away. And you're just going, oh my
yeah,
goodness. Yeah.
yeah. One of the things I was not a fan of on the big beautiful bill that came through this past year was the accelerated depreciation coming back. And
Yeah.
I get it. It does drive economy. It does, people
Sure.
love buying. But it's just it's one of the reasons I got in this business, right? I mean, in '08, when I saw all my clients, they knew the accelerated depreciation better than anybody, and his bet next year was going to be better than this year, and because they took on debt, right? I mean, it's one thing to
Right.
take accelerated, but you finance the equipment,
Yep.
and then you had to put the equipment to work next year, which means you had to bid lower, which means you lowered your margins in order to get the work going because you had guys on equipment and bills to pay.
Sure.
It just became that hamster wheel that you found yourself on, and it just kept spinning out of control. And then, 08, 09 happens. But what do you see on that front with the accelerated depreciation? I mean, again, I'm all about strategically. I always think that's the biggest one to me that lets it tell the tax tail wag the dog is buying equipment because you don't want to pay Uncle Sam. I mean, I tell people
Yep.
all over I speak. I mean, like the Boston Tea Party was a real thing. It's inherent in our DNA. We want to pay. We'll pay the fair tax, but we're not going to pay any more than we need to. Right? We'd rather give it to
Right.
our church. We'd rather give it to our to 501c. I mean, but not give it to the government. Right? I mean, it's just the way Americans think, and we're fairly unique in that. I'm finding out around the world that concept. But it's real. We've taken a lot of risks to get to where we're at. I mean, we deal with this all the time, right? And you deal with it more than I do. I'm the guy on the other desk going, what else do you have for me, Mr. CPA, for me to mitigate my taxes? What I guess what I'm getting to the point here is what are you seeing? What are you seeing from the business owner standpoint right now with this big beautiful bill? Anything exciting out there, or is it just the same old, same old? I mean, is there anything in there that's really kind of new and exciting, or where are you at with that?
I would say new and exciting for the business owners, really limited. There's two things that did come back that I know many business owners were thrilled to get back, which was bonus depreciation and the change in the R&D tax credit laws. So the fact that you can now direct expense R&D expenses, whereas from 22 to 24, you couldn't, you had to amortize those. And so I saw those two things as being really big for business owners coming through. But a lot of folks heard the big, beautiful bill concept and expected something drastically to change. And what a lot of folks didn't realize is that there was a cliff coming at the end of 2025.
Yeah.
When really what the big, beautiful bill did was stop the cliff from happening. And so it's really maintaining the status quo that we've had since 2018. But a lot of folks were looking for something more. I'm like, no, it really is just extending now all of it's the QBI deductions, the 20% ability to only pay income tax on your 80% when you're self-employed in that space. Like all of those types of things were really what it was extending and not expiring. So but certainly the R&D and the bonus depreciation were two huge things. And honestly, Van, like I'm right there with you. Like when I go talk to clients, if they're saying I want to buy something, I always follow it up with, would you buy it anyway if it weren't for the tax benefits? That is always my question. Don't go spend $500,000 on a piece of new machinery or 80 grand on a new truck just because you don't want to pay a tax bill. Like there are other options. You know, again, if you work with good tax strategy focused CPAs, you're gonna find other options besides buying something you don't really need.
Yeah, 100%. You know, one of the things that's always blown my mind is buildings.
Yeah.
You know, you meet a plumber. He's a good dude. He's working his butt off. Got a good business. Got 10 plumbers, and next thing he's told, I got to own a building. But then you think, okay,
Right.
do you really want to? Are you a guy that should own a building? The second thing, and then the other on top of that, you're pulling a lot of capital out of your company to get your 20% down if you're not doing an SBA.
Right.
And then you think, you know, what long-term liability are you taking on for the building? But those seems to get discounted. I mean, I don't know if that even goes into the equation, right? And this is where I think the difference between your firm, Brian, and the compliance guy, right? The compliance guy, I call it the CPA book. There's certain chapters that they, you know, like 401k,
Yeah.
you know, all these typical things a CPA
Sure.
would recommend, and it's always by the building. And I think to myself, like, do you want to pull that much capital? You're a manufacturer. You make a product, you distribute a product, whatever. You're making money. You're making 18, 24, 30 cents on the dollar doing what you do, yet you're going to pull that much money out of your operating capital, so you can't buy as much product in the future to put it into a building so you can get a tax deduction, right? It's like sometimes I just think a lot of those equate, you know, well, this is the playbook. This is what I was told to do. This is the, you know, and I think sometimes people discount the risk you take to own real estate. Now, there's ton of upside for appreciation and all this time. I think they've kind of lost luster a little bit right now because of price of dirt and the price of building. And it's hard to make that cap rate make sense when you're borrowing money at 6 or 7%. Your cap rate's at 6 if it's 100% occupied. I mean, that's what the things I typically have seen. But it still goes on. I think 1031s work a lot in commercial real estate, obviously. But from that standpoint, what's the best piece of advice could you give a business owner looking at going forward? And that's you know, is looking for different answers, not different answers. I guess looking for solutions relative to the risk they've taken. Right. I mean, that's the worst thing I ever hated to see. A very successful business owner, entrepreneur, not adverse to risk, and he sits there and tells me in a big meeting that, hey, I'm done growing. I don't want the headaches. Why? Even when I just write this big check, I'm done. I'm not growing anymore. And it just kills me because I know these are the guys we need to press the gas to the pedal. I mean, these are the guys that know what they're doing and how to do it and be very successful doing it. And they're the ones driving our economy at the end of the day. What would you tell that guy?
Yeah, great question. I mean, this goes back to my banking days. There's a statistic that I had to live with all the time in the banking world because it was part of our risk scenarios. Is what's the number one reason small business owners go out of business? So the SBA has this data point. The SBA that looks at all the small business loan defaults, they know the reason why. The number one reason why small business owners go out of business, it's not a lack of revenue. It's a lack of cash flow management. So if you're talking about buying a building, if you're talking about doing SRA, if you're talking about whatever you're doing in the organization, I find that there's got to be, I mean, it's a staggering 90% or more number of business owners are really, really good operators. They just don't love to roll up their sleeves and get into the financing. And if they do, they would realize that they don't really understand the cash flow of their business, the cash cycle, where the cash comes from and where does it go. So for me, I would start with understand your cash cycle. And from there, some of those decisions around, should I buy the building? Should I take 10% out of my cash flows to do that? Should I do SRA? Those types of questions become easier dialogues once you have data that everybody can rely on. But again, number one reason for bankrupt businesses is they don't have a good handle on their cash flow. So my advice would be part of the 10%, frankly, in the world that tries to get a better handle on your cash flow and understand it. And if you don't have a CPA that's helping you do that and you need help, probably one of your better entries into, I need to go look at other options, if I'm being honest.
No, I think that's another great piece of advice there, Brian. I was guilty of that. My finance, I was really good at sales, hired operational folks, and of course, finance was the last department I hired. And it took a CFO, the fractional CFO, to point that out to me. Like, man, and he said it. He said, this is typical business owner stuff that,
Sure.
Finance is the last one, and it's probably the most important at the end of the day, because let's the other two actually exist, right? Sales and operations got to exist with finance.
I was talking to a new client of mine a couple of days ago. He had kind of cut some corners in the financial space, tried to find the cheap accountant, just compliance driven. You could tell the tax returns across all of his entities were sloppily put together over the last few years. And I just posed the question and observation. I said, I'm assuming, Mr. Client, that you really had a hard time wanting to spend money in the accounting department because it's just a cost center. It's not generating you revenue and it's not doing anything for your. And at the end of the day, I hope you can start to appreciate that a good accountant in that seat, even if it's a fractional CFO, like what Linked Accounting can do for these organizations, getting someone who understands their business and understands the cash flows, it should be worth their money if it's the right person doing the right things.
And I think you hit it right on the head. We look at that as a cost center, not a profit center. But at the end of the day, I've realized it is a profit center. It really is. It's the more I go through this life, looking at high net worth people know how to position money. That's what makes them high net worth. It's not. I think there's a breed of people out there that can make money. It doesn't matter. They can lose it and make it. I mean, it's just in their DNA, right? But it's the back room. It's closing out that corral on that fence and saying, okay, and that's your finance department. And I think we miss that a lot of times. And so, hey, Brian, so let's, thanks. It's been a great conversation. Thanks for joining us. I know you may not necessarily be looking for new clients, but I know you got a wealth of knowledge out there, man. What is the best way if somebody was listening to this that would want to talk to you? And I should mention, Brian does some great things for us on the 831Bs. He's got some great stuff that once you're no longer associated with SRA, that how he can help migrate some of these plans for strategic partners and for our clients around the country. If you want to talk to Brian about that, definitely reach out to him. But besides the other things we talked about, Brian, what's the best way to get a hold of you?
Yeah, I would say, so if you just go to our website, linkedaccounting.com, and there's a contact us, just fill out the form and we'll certainly do a consult and get you in and see if we can be a good fit for each other. That'd be awesome.
And you can do business anywhere.
Yeah. We're nationwide.
Yeah. Awesome. Brian, thanks again for joining us. And I'm glad we were able to get together on this, and we'll be talking soon, I'm sure.
Okay. That sounds good. Thanks, Van. Appreciate it.
Take care.
Take care. Bye.